Happy Sunday, everybody. Welcome to the G.A.R. Capital Official Podcast. My name is Carlos Garcia. I'm the founder and CEO of G.A.R. Capital. Thanks for stopping by this week or weekend. I hope everyone's having a great weekend. And it's time for another episode of our podcast. Today's episode will be just market recap. We're going to recap the market. We're going to preview the week and see what's going to go on and what we're looking for and what we've seen and what to expect. So we can make the best moves, the most profitable moves to go on with our week and keep doing what we're doing. Just making profits, taking names, killing it. Special shout out to all of our followers and subscribers. Thank you so much for supporting us in all of our endeavors. We really do appreciate it in everything you guys do. Thank you so much for every like, for every comment, every share, every shout out, every subscription, everything. We just appreciate you guys. Unlimited gratitude for everybody who is a part of the G.A.R. Capital family. Really appreciate you being part of our team. And with that being said, let's get started with the week. So, boy, does this bull market ever end? What could stop this bull market? That's kind of been the tale that we've been talking about for a while now. So now I'm going to go and bring up CNN Money so we can go ahead and kind of go over for the week how everything went. I want to bring up the Dow Jones Industrial Average for the week. So far, year to date, the Dow Jones Industrial Average is up to 2.5% for the week. 52 1-year change of 21% and a 5-day change of 3.25%. So again, Dow Jones blue chip stocks still great all around, still strong. A couple laggards here and there. Procter & Gamble, Walmart laggard, which is one of our top 10 stocks. McDonald's, one of our top 10 stocks, down 8%. For the year, again, we're still holding. Nothing has changed. I mean, it's just a couple of laggards. Microsoft, Intel, again, the techs have just been on fire. The tech companies, the industrials, Boeing, 20%. Even with this tariff talk, nothing has changed. Caterpillar basically in the green now for the week. Apple up 6% for the year. Goldman Sachs, financials strong. IBM, tech company, strong. The laggards have been energy, as you know, energy, ExxonMobil. Then, of course, General Electric, the falling knife that is General Electric, just watching that. Again, the markets in general have been very strong. And now you're starting to see a lot of things have changed. Now, again, the protectionist policies of the president adding tariffs, but again, kind of softened the stance by saying that Mexico and Canada are exempt from this. So again, what does that mean for our Asian partners overseas, our Asian trade partners like a Japan, like a China? What does that mean for them? Again, more exemptions can come in place. So again, a lot of headlines that came today. The steel tariff, the aluminum tariff, number one, and the resignation of Gary Cohn. Gary Cohn resigning his post as chief economic advisor, former Goldman Sachs employee or executive, not employee. Well, you would think that would change markets, obviously, because he seems to be the smartest man in the room in regards to economics. And the Trump economic policy has been front and center as the main reason he got elected, or the main reason that the Make America Great Again slogan came about, was that a stronger stock market all around in a fundamental sense. Now, whether your opinion about the president politically is irrelevant here. I mean, it is fact that the stock market has rose under his presidency. Non-farm payroll report has been absolutely crushed it, and the non-farm payroll report was a strong catalyst to boost the market. And the Dow Jones closed on Friday up 440 points. And you see here the Nasdaq closes out a record 7560. 8,000 is almost in play here. I mean, we're not that far off. Russell 2000 almost at 1600. Dow S&P 500. 2,800, nearly right there. Again, you're starting to see the bull market just keep going. Nothing, no matter what has happened, no matter what FBI probe, adult film star Stormy Daniels, the issue with the affair and the hush money for the lawyer. I mean, it's hard. It's easy to say now that Donald Trump is the Teflon president, just like Ronald Reagan before him, that nothing could touch him. It really no controversy has hit in regards to the market. I mean, the market has just shown a supreme confidence in this administration and in these companies to just keep growing. Look at the jobs reports, wages, just strong off the rip. We can look here at CNBC now, and I can get you that number here. How we closed up and everything. But the Dow, I want to see exactly Okay, here we go. Breaking. 313,000 jobs added in February versus 200,000 estimate. That's pretty strong. Very strong. And you can see here, employment rate at 4.1%. We were expecting 4.0, but again, such a splitting hair thing here. But this jobs report was just the catalyst to just soar the market. It just keeps pushing and pushing and pushing. What more can you say about this economy? You just have to ride the bull wave. You have to ride the market up. And looking at stocks again, I'm going to take a look here at Dow futures. Let's go ahead and bring up that chart. Excuse me. You're going to see just a vertical chart here. You could just see here on an hourly. Let's go ahead and bring it up here on a daily chart so we can take a look at long term. You could just see just a vertical move. Unreal. Now again, looking closer here at this mark here, I can add a little bit of an alert here at 25,500 on the futures. And we know support has been kind of hit here, but again, respected, but we're seeing on the trend up. This is just a chart again. Nothing is confirmed, obviously, but 25,500 will be my next alert up for the leg up. So I'm going to go ahead and add an alert here at 25.5. See if I can add an alert here at 25.5. 25.570 is fine. Right here we have the alert. So again, if we can break that, again, I'm going to go ahead and target 26,684 on the futures mark. That would be the next high. Again, just a bullish run. You could see here, just a straight vertical line up. There's nothing really more to discuss here in the Dow futures. Let's take a look at E-mini futures. Again, we're still bullish on the market at the end of the day. There's nothing that can stop it. And now we have North Korea talking about peace talks or stopping their nuclear ambitions with South Korea and the United States. It's absolutely unreal. The catalyst that's going to keep pushing this market up. Is it a party without end? No idea. But I could just tell you this, that it really doesn't matter. We're just going to keep riding the wave. Adding some channels here again. 2812, I would say 2825. I would add a alert here. You can write this down. 2825. If we could break that mark, definitely go to the upside. 2870 would be the next target, but I would like 2900, obviously. So again, I want to have the market at 2825 so we can hit 2900. 3000 would be amazing. 3000 is actually our call for end of the year for E-mini futures. Let's take a look at Nasdaq. The tech-heavy Nasdaq has just been an absolute on a tear. 7124 is the Nasdaq on the future side. Again, another vertical lineup. Looking at the channel here. Looking here around support levels, we can kind of put it here, kind of spitball it here. 7129 already broken. I want to go ahead and make sure that we can have maybe a 7150 mark, maybe broken, and see if we can continue this movement to the upside and then target 7200. 7200 would be great. I'd like 8,000, but on the Nasdaq, remember the Nasdaq and the Nasdaq futures are completely different. They're not exactly the same. 7560, 7129. You can see the difference in points. Still targeting 8,000 for the Nasdaq by end of the year, and we're only in middle of March. Absolutely, just insane bullish moves. Just great all around. If you're a bullish trader and you're an investor, you're just making tons and tons of cash right now, and you should absolutely be thrilled. So again, these are the stocks we're looking at. We're looking at just indexes right now, indices. Major things that we're concentrating on is indices and how much they can rise. Now again, if you're trading the Dow futures, if you're trading the S&P futures, you got to take a look at Apple. Apple is very key here. I have a mark here at 181. We're nearing the all-time high of 180.62. 181 hits. Again, we could probably get some short squeezes, meaning the shorts are going to get squeezed out here. Looking at the options charts here on Apple, on a short term, you could just see all the bullish bets on this side. Not very much bearish bets, but a lot of bullish bets. Look at this, 37,000 volume on the 180s for March 16 into this week. If we want to take a look at longer term options, we could take a look here at April 6. Again, very strong tells here, 185s. I want to take a look here at the Aprils and see if maybe we have any 200 calls. Let's see. 200 calls. Yep, absolutely. 16,000 open interest on some 200 calls for July. So I want to see maybe by end of the year, do we have any 200 calls? No, too far out. Again, open interest is there, but volume isn't. But again, that's to be expected since it's just short term. Look at the 180s for May, 5,000, 3,000, 5,000. So 190s, again, not seeing a lot on the bear side. Again, on the short side, a lot of buy side calls here, a lot of buy side movement. So again, that gives us that tell that Apple is going to be very strong. And again, it's so heavily weighted on the Dow and the S&P and the Nasdaq, since it's the largest company by market cap. That is the barometer. We want to see that. We want to see exactly how much can Apple go. Again, if Apple can hit 200, oh boy, all bets are off. But again, that's a lot of market cap to hit. I think we would probably get closer to the 1 trillion market cap, which would be the first company in the history of the world to hit a $1 trillion market cap for a stock. So with that being said, another thing that I really want to look at with you guys is oil. Oil has been just zigzagging here, a lot of daily here. If you could see, let me go ahead if I could bring it back. Sorry about that, guys. So I can bring up a daily chart. You could just see here falling, but again, kind of bearish. I mean, kind of bullish here on from the 42s, but again, falling wedge here, and you see the channel. Again, just like we always been watching oil every single morning, but again, it's still no man's land, right in the middle of the channel. I don't want to make any bets here because everything is based on one thing: inventories. Are we getting this? Are we getting the demand? Or are we still just oversupplied? Again, $62 a barrel. We've been targeting 65 for a while, and we've hit it in February. Not like we didn't hit it. But again, 70 would be very, very strong for oil energy companies if we can get bounced back. But again, just looking at this oil futures chart, 62, I'm not going to make a move here. Let's go ahead and take a look at the XLE, which is the energy sector spider. And you could just see just the drop off here from 78 down to 68, $10 move. I mean, from January. And I mean, we've just been here, just range bound around that area. Do I want to put money to work here on XLE? No. I do want to play a break back out to 78. I would love to target 78 to kind of bounce back from the support levels, but I need a break here on 70.41. If I can get a create alert here on 70.41. Once we break that, absolutely, I'll go ahead and play to 78 or 79. Absolutely. But right now, I'm not putting fresh money to work here. There's no point here to just guess. Again, we could get a breakdown. Since we're middle of this channel here, I'm not going to make this guess here. So again, XLE, CL, you could see the consistency of the charts in regards to XLE and oil futures. And again, those are just two symbols now, like the futures contracts and XLE, where I just want to keep my eye on. If there's any other company that I want to take a look here, CVX, which is Chevron. Again, sticking with oil. And again, still no man's land. We're still looking at, the channel here. If you could see kind of the XLE and the Chevron is almost kind of a very similar chart. If we could just kind of get a break here, let's say a break of 119.50, then I would definitely buy some calls here. Absolutely. So we can get that back all the way to 134. We have a lot of room to the upside if we can break that 119.50. So again, it's all based on supply and demand. You starting to see the charts, the way CVX and XLE is kind of the same, similar. Energy has been the laggard, as we've been talking about. If energy is the laggard right now, the one that's been just leading the way has been technology. So we're going to take a look at XRT. Oh, that's XRT. Is it tech? I forget the tech ETF. Tech ETF. I just totally forgot about it. And I apologize. How embarrassing. Tech ETF. I think get the tech ETF. What is it? Oh man, XRT is retail. The spider XLK. That's right, XLK. So that's my bad. XLK. So let's take a look at the XLK. I gotta start writing down my spiders. Look at the XLK here. Just a vertical move up. I mean, it's just absolutely been on fire. I mean, 70.51 on the XLK. We usually don't trade the XLK, just a heads up. We usually trade the Qs. The Qs have a little more volume than the XLK. But again, I just wanted to show you this chart. I wouldn't put in any alerts here because I prefer the Qs. If you want to take, for my options traders, XLK, let's take a look at the options chains. XLK, again, the volume is very weak. Compared to QQQ, which is very tech heavy, look how much volume I'm getting here in comparison. You wonder why we don't trade the XLK, and you wonder why I forgot the darn symbol. So let's take a look at the Qs, guys. Qs is the Power Shares QQQ Nasdaq Power Trust ETF. So again, bullish to the upside. Looking at this channel here, we already have our alerts. Alert here at 174 if you want to go ahead and write that down as well. If we break that 174 mark, I'm definitely going to the breakout side and maybe target about 180. 180 would be a good target. If you want to take a look at the Qs for the week, the 175s are very juicy. 122,000 on the open interest with 37,000 volume. Very, very strong across the board. Again, bullish on tech. Even this kind of tariff stuff or protectionist policy has not affected tech. Very cash heavy. The only thing I'm concerned about is valuations. But again, that's been a tech issue for a while. Your Netflixes, your Amazons, all those valuations. Netflix with their debt. Again, the main thing that's been driving here, the Qs that I've been saying for months now, guys, has been cloud technology. Take a look at Red Hat, RHT. Take a look at Adobe. Take a look at Oracle. Take a look at Salesforce.com. So I want to bring those up. Let's go and bring first one, Salesforce.com, and just take a look at the chart. Again, vertical chart. You can see what I'm talking about. Salesforce.com, strong cloud play. Let's take a look at Red Hat. New all-time highs. Again, 157.22, vertical chart. I'm telling you guys, cloud-based plays have worked for us. Oracle, another one. Again, Oracle has been around for a while, so you can kind of see not as vertical as a Red Hat, not as vertical as a Salesforce.com, but again, bullish, very bullish. Just stick on that channel here. Another one here will be Adobe, new all-time high. Again, 221, look at that difference. I mean, just 100% move, 50% move for the year. I mean, actually, 100% move, almost 100%, like 80% since since last year. Absolutely ridiculous, Adobe. We've been saying Adobe for a while now. It's one of our top 10 stocks. Again, cloud-based play. We've been saying it. You need to get in on Adobe and position yourself. Another company for cloud-based play, of course, has been Microsoft. Good old Microsoft. And again, another vertical play. And we've made so much money playing their options. Their options are very liquid because of the volume. So great all around. So looking at the facts here, looking at what we're looking at here, Microsoft on the cloud-based plays. Microsoft, Red Hat, CRM, which is Salesforce.com, Oracle, and Adobe. Those are your 5 cloud-based plays. We've been saying it for months now in the morning notes. Guys, you need to position yourself in. It's only going to get stronger. Another S&P, another stock that has just been on fire here, and we've been loving it, has been Square. 16 to 53 is absolutely ridiculous. I mean, what a 400% move. And we've been loving it since it was 20. Since last year, since it was at $20, we've been loving Square. And I actually am a shareholder of Square. I'm a stockholder. And I'm loving the gains, absolutely. But again, you can see how tech has just been pushing and pushing and pushing to the upside. And all that fresh money is coming to work just on tech. Here's the difference here on Square. Square has been very pushing on cryptocurrency. The next company I want to take a look at is PayPal. Again, vertical moves to the upside, another crypto play. Again, if you don't want to buy Bitcoin itself, fine. We'll talk about crypto here in a second. But you can see PayPal and Square, payment processing, crypto, the Cash app, all that good stuff. You need to get into these 2 stocks if you want to play crypto, but yet not own it and still have the diversification of a strong growth company in tech. So take a look at those 2. Speaking of cryptocurrency, I want to take a look here at cryptocurrency. Right now, we had a really big move, 91.33 on Bitcoin, and you could just see here the downside. Now we're just ranging here on a 6-hour chart. It's not really a great chart, but charting crypto is kind of pointless, to be honest with you. You're just not going to. It's so volatile. It's not going to fix any pattern. But again, 91.33. I'm a holder in Bitcoin. I am not looking to trade it at all. Again, my price target end of the year is still $30,000 by end of the year. Again, are we there yet? Absolutely not. But I do believe my call, and I'm holding until we get there. And looking all around here, Bitcoin. I mean, we hit as low as 8,600 and it just bounced back. So a good bit dip buy. What I find very curious about people is that they say, oh, buy the dip, buy the dip, buy the dip. But yet when the dip comes, they don't buy, which is kind of funny. They don't buy the dip when it's available, but yet I don't understand. But either way, they come in, they freak out when it's down and they get excited when it's up. Guys, again, don't buy when it's up. You want to buy cheap, buy low, sell high. That's the key for Bitcoin or any kind of financial asset instrument. 91.07, again, guys, if you think it's going to go down and you have weekends, I've always said, if you're ever freaking out, you need to sell immediately. But again, guys, this is a long-term investment play, which is Bitcoin. You need to understand this is a long-term investment play. Do not be afraid. The next thing, and I want to finish up here, guy, at the podcast, is we talked about tech and we talked about energy. The other side of the coin here, when we talk about yields, if you see, I talk about bonds a lot, and I talked about this in the last podcast, which is the XLF. XLF is the Spider Trust Financial ETF. And you could just see just a vertical chart to the upside. And what has the difference here has been rates. When we bake 3%, guys, I'm telling you, financials will be the biggest beneficiary of this, of higher rates. Financial sector trust, 2970 at the moment. We're ranging here. Oops, excuse me. Let me go ahead and get a support level here. You could put out the resistance level kind of here, breaking out. If we could break the new all-time highs of 3030, I'm going to go ahead and create an alert here. 3030, create an alert right on the top. Once we break that, I'm going to go ahead and play the breakout. Absolutely. But again, the main thing is a 10-year bond. Higher interest rates means higher profitability for these bank companies. So bank financials, BAC, take a look at BAC. BAC, again, strong. We have an alert. Let's take a look at JPMorgan Chase. Great balance sheet, great executives. I mean, they've just been on fire. I love me some Jamie Dimon. Look at this, just bullish, bullish, bullish. You know, as long as rates are going to go up, you're going to play these. Another one, Goldman Sachs. I mean, now the talk was that Lloyd Blankfein, the CEO, was going to leave. He denied that rumor. So again, all is well with Goldman Sachs at that point. Look at the daily chart. Bullish, again, like to play these. Those would be my three favorite plays. If you want to play Europe and you want to play overseas, you could play Citigroup. They've been very strong, but again, just do it at your own risk. That'd be my fourth best financial to play. I would say JPM number one. Well, XLF, JPM 1 and 2. Then want to play Goldman Sachs 3, and actually Bank of America 3, Goldman Sachs 4, Citigroup 5. That'd be my 5 financial plays. So again, you need to put an alert or keep an eye on 3% yields because that's going to be that push to get financials over the hump. Very key. So again, this week coming up, not much in regards to earnings reports. Just nothing really much going on, nothing really to take a look at. I'm looking at it right now as we speak on my phone, and Dick's Sporting Goods. It's a very heavy retail earnings reports. Overstock.com, Ulta, Dollar General, Dick's Sporting Goods, DSW. Nothing that's going to set us the world on fire. I mean, the only thing I thought about this weekend was the fact that Toys R Us is maybe liquidating their whole inventory. So we take a look at Hasbro. Hasbro is a toy maker, and you could just see here just falling. We could probably do some puts here, but again, if you want to take a look at Hasbro, just the options are just not there. So unless you want to short the stock yourself, which I probably wouldn't, you could just see here just not enough volume to us to have to play anything with it. Another one is Mattel. Mattel makes Barbie and Hot Wheels. Again, volume is not there. It just isn't. Do they have open interest on some calls? Yeah, but I wanna have good volume. So let's take a look at the chart of Mattel. Again, that's a play on Toys R Us. And again, just falling, falling, falling. Just ugly. But again, there's not enough volume to us to play. So again, sit on your hands on this one, guys. Nothing really much to play. So just to reiterate, again, the Cloud Blaze plays, financials, energy to see the catalyst. We want to take a look at, of course, the financials as well. So financials, tech, and energy, the 3 sectors I'm always looking for. If we get a bounce in energy, that's just going to push the market even higher. Again, don't make any moves until you put your alerts, guys. As always, keep proper risk management, as always, and make sure that you stay patient and stay disciplined to your trading plan. You know your trading plan. Again, you trade how you prefer and how you like. Thank you so much again for joining us in our podcast. That's our week in review. No real other catalyst other than that for stocks, but we'll catch you for next week and go from there, guys. Have a great week. Let's make it a profitable week. I believe it's the second full week of March. We had a good non-farm payroll report to just push the market higher. I do believe we're going to open very, very strong on Monday. And we just want to continue to ride that bull wave, guys. At the end of the day, just ride the wave, whichever way it goes. So we'll leave it at that. Have a great weekend again, guys. My name is Carlos Garcia, the founder and CEO of G.A.R. Capital. Make sure to follow us or subscribe to us on our YouTube channel, which this here is going to be simulcast. Number 2, follow us on Apple Podcasts or Apple iTunes. And number 3, follow us on Anchor, which is our podcast host. Appreciate you guys as always. Your humble host, CEO, and founder, Carlos Garcia. Again, signing out. We'll catch you for the morning note on Monday, 8:45 Eastern Standard Time. Have a great trading week, guys. We'll see you next time.